What's going on, guys? Welcome back to the channel. Welcome back to another video. If you guys are hanging out with me for the first time, please consider subscribing to the channel. While you guys are at it, go ahead and drop a like for your boy. I really would appreciate that. Well, guys, I hope you guys are getting ready, you're getting prepared, because there's a lot of turbulence happening in the market right now. The stock market, the real estate market, the housing market, the labor market. And I did a video not too long ago, and I was talking about how my mortgage payment has gone up. Not once, but at least twice in the last 2 years. And collectively, my mortgage payment has gone up $450 between this recent increase and the previous increase, all thanks to real estate appreciation, housing market appreciation, right? So this is all well and good, but this could very well be the next collapse, or at least the next precursor to the next collapse. And so we got to be prepared for these things. Now, a lot of news came out today. This is actually going to be a very, very big week for banks. A lot of banks are reporting earnings in the stock market. You guys could check out my previous video. I went into detail on that, what you need to be aware of and what you need to prepare for. But I actually got an invitation from one of my banks today. And I was actually shocked to see this because there's been a lot of banks collapsing. But more importantly, I'm seeing more and more banks going above and beyond, offering FDIC insurance that is greater than the standard amount. Now, normally FDIC insurance is like $250,000 coverage. Basically, if you have a bank account with a bank, traditional bank, it's usually about $250,000 FDIC coverage. However, I have received a notice from M1 Finance. Let me show this to you guys. Look at this. M1 Finance high yield savings account, plain as day, 5%. That's some big boy earnings for that particular savings account, right? But I don't know if you guys noticed what was on the bottom. Did you notice? Comment down below if you saw what was on the bottom. What are they bragging about? What are they baiting you on right now? And just to be clear, M1 Finance is not the first company that I've seen this from. I've actually seen this with I think it was either Betterment or Wealthfront. But one of those companies, it's basically an investment brokerage. I think they have savings. Well, obviously they have savings accounts because they offer FDIC insurance. But on this one, did you guys see what was on the bottom? I want to show it to you again. Look at that big number on the bottom. That says $5 million FDIC insured. What does this tell you about the banks? What does this tell you about the banks? And they're offering 5% APY. To me, the banks are trying to get your money. The banks have seen enough money leaving the banks. They're now saying, hey, we need you to bring that money back, and we're going to entice you with some rather lucrative offers. Yeah, so you could literally get a 5% APY rate of return on your money, just leaving it in the bank nowadays. And, you know, so this is big. This is big. Goes on to say 5% APY to accelerate your savings. M1 Plus members earn 5% APY with an M1 high yield savings account, one of the highest out there. This FDIC insured account is insured up to $5 million or 20 times higher than the standard protections, which we just talked about. So that's kind of wild. So they're basically, the banks are trying to say, hey, don't worry about it. Banks are safe. Bring your money back, please. Take your money out from under your mattress, right? They also offer borrowing on margin for as low as 6.95%. Not a big fan of borrowing on margin, but it's a way for you to leverage your portfolio. So if you're like really confident in the stock market going up, or maybe you really like Amazon, you really like Microsoft, you really like Walmart or Costco stock, but you don't have that much money in your brokerage account, you could technically buy stocks on margin. And if the stock is going in the right direction, you can make a lot of money. Of course, if the stock's going in the wrong direction, you can lose a lot of money real fast. But speaking of this, a lot of people have been making money as the stock market has been going down. And, you know, this is all about preparation, folks. You know, just because the stock market doesn't go up doesn't mean you can't make money. And a lot of people have been making a ton of money, a ton of profits trading the stock market as the stock market has been going down. You've got ways of shorting the stock market, and you also have ETFs that allow you to make profit as the market moves down. And basically, these are reverse ETFs. And so basically, they increase in value as the stock market moves down. So I know a lot of people are expecting this housing market crash to take place, a big old stock market collapse, a massive stock market crash. If that is where you think that the market is going and you wanted to make money off of it, then you'd be looking at those types of investments. And this is what hedge funds do. This is what hedge funds do, but this is also something that the average American can do as well. So those options are available. And yeah, so I just thought that was a little odd. We're seeing more and more banks trying to bring the money back into their institutions. What do you guys think on that? Is this enticing enough for you to want to bring your money back into the banks? And here's another thing that investors are thinking about. If the stock market's bringing, I don't know, 7, 8, 9, 10% interest or return on investment over the last 50 years or so, is it worth being in the stock market when you could take zero risk, put your money in the bank instead, earn 5% guaranteed, and not have to worry about if the stock market crashed or not? This is a big question. Now, here's another thing. Mortgage payments are going up, and it's not just me. If you live in some of these cities, your mortgage payment is likely going to be going up. And I know, a lot of you guys have adjustable rate mortgages, but those individuals with adjustable rate mortgages, they know their mortgage payments are going up. There's no surprise. However, it's the people with fixed rate mortgages that are getting the real shocks in the mailboxes, if you know what I'm saying. So if you live in Las Vegas, you are likely going to be seeing your mortgage payment going up. Median real estate tax paid on all homes is $696. The median real estate tax paid homes with a mortgage is $928 per year. And median real estate tax homes without a mortgage, $573. That's actually very low, especially compared to, where I live. Now, if you happen to live in Birmingham, Alabama, median real estate taxes paid homes with a mortgage, $958. But again, all of these cities and states, their mortgages have been increasing on a regular basis. New Orleans, anybody from New Orleans? Their median real estate taxes paid with a mortgage, $1,473. I didn't think it would be that high. If you happen to live in Indianapolis, Minnesota, mortgage median real estate taxes paid homes with a mortgage, $1,596. If you happen to live in Louisville, Kentucky, median real estate taxes paid home with a mortgage, $1,609. So guys, get ready. Now is the time to prepare. Even if your mortgage payment didn't go up, you have to prepare, because if you see everyone else's payments going up, just know that it's a possibility that yours could go up too. So what do? Number one, make sure that you are capable of absorbing a higher mortgage payment if you happen to get a notice in the mail. And it's not so much that your mortgage payment is changing per se, but it's the escrow that is associated with the mortgage payment. It's kind of like bundled together, right? So your mortgage payment consists of, assuming you have your property taxes and your insurance bundled into your mortgage payment. Your mortgage payment is like PITI, your principal, your interest. That's what's going to the bank. But then you got your taxes and your insurance. So obviously your taxes are going to your city government, and your insurance is making sure that if anything bad happened to your house, basically you're covered. Well, property values have gone up, and so the cost to repair or rebuild your house is much more expensive. So insurance policies have been going up drastically. All of the insurance premiums on homes across the United States, for the most part, especially in Florida, have been going up drastically. In fact, I just got a letter the other day from Allstate. A local agent reached out to me basically saying, hey, everyone's mortgage in the area is going up. Give us a call. We'll give you a quote. We're pretty sure we could save you money, blah, blah, blah. You know how they do, right? But it's no surprise. So you got to prepare. It's coming down the pipeline. So I don't want you guys to be shocked when this happens to you. Look at this, Phoenix. Median real estate taxes paid on homes with a mortgage $1,605. Nashville, Tennessee, $1,615. Yeah. So, and look, oh wow, Oklahoma City, median real estate taxes paid $1,806. So you might be saying to yourself, well, what do I do, right? Well, number one, assess your financial situation. Make sure you have a budget. Look at how much income you have versus how many expenses you have, right? Make sure you have an emergency fund. I recommend, if you don't have an emergency fund at all, make sure you start off with at least $1,000 in your emergency fund. Stick it in into a safe, high yield savings account with a bank that is FDIC insured. I think that that's a good starting point, right? And then in addition to that, start with $1,000, but I'd be working on aiming for at least a 1 year emergency fund, meaning all of my expenses need to be covered for at least 1 year in this emergency fund. And I'm not looking to invest the money in this fund. I'm not trying to throw this money in the stock market. I'm not buying ETFs or index funds with this money. This money is purely for emergencies. So we're not going to Vanguard and Charles Schwab to buy ETFs and index funds. I'm taking this money to set aside, it's kind of like a fire extinguisher, break glass in case of emergency. Now, you want to go to Charles Schwab and Vanguard and buy ETFs with money above and beyond that? Cool. It's time to grow that money. But I'm not trying to grow my emergency fund. I just want to make sure it's there in case of emergency, and I needed to be safe. Now, there was this interesting article that came out, and it said, I'd be buying a house, not renting. Apartment asks tenant cosigner to make 80 times the rent. Now, I don't know how many renters we have here watching this show right now. Comment down below if you're renting, and comment down below if you're a homeowner. But this seems a little bit odd. So as renters are forced to face an increasingly more expensive rental market, one tenant to be was shocked by a New York City apartment's high cosigner income requirements. Wow. So the video was posted obviously on TikTok, right? That's where everything goes to go viral. And it shows a glimpse into the reality of many people living in what is consistently among the United States' most expensive cities, New York. Real shocker. So in the TikTok, Maggie explains that she let the person who was representing the apartment unit know how much her cosigner's salary was, as she knew she needed a cosigner if she wanted a chance of getting the apartment. Well, the apartment shared in a text that unfortunately the building's management requires a cosigner to make 80 times the rent. This has got to be a mistake. Who the freak makes 80 times the rent? And if you did make 80 times the rent, would you really be renting? So in Maggie's case, the cosigner would need to have made an annual income of about $200,000. If that is a possibility, please let me know, the person wrote. So it's a bit wild. And the comment says, the crazy part is that she asked if the cosigner's income had to be individual or if it could be their household income. They said it must be what the individual makes on their own. So, to get approved, you have to be an individual renter who by yourself is making $200,000 a year. I'm not saying people don't make $200,000 a year, but the average person's not doing this. So that's certainly limiting their buyer or their renter pool. So are you guys seeing anything weird and wild in the rental markets, in the housing market? I mean, sales are down. I am seeing more new homes get more aggressive with the prices. Not seeing a huge collapse. Different parts of the country, I'm seeing, 5-10% pullback, but honestly, not nearly as bad as I thought it was going to be, since mortgage rates have literally doubled. But drop me some thoughts down below. In addition to what I was talking about earlier in the video, though, I'd be strongly looking at ways to increase my income. And I wouldn't wait until the mortgage payment letter hits your mailbox telling you, hey, your mortgage payment's going up. I'd be looking at these different things right now. Side hustles. I'd be looking to sell things, eliminate unnecessary debts. If you got some high interest credit card debt, Visa, MasterCard, American Express, a store card. I know people carrying, store cards and literally carrying the balance and paying interest on the thing they got as a deal for years. And it's like, okay, I get it. If you have 0% interest, okay, I wouldn't necessarily be in a huge hurry to pay that credit card off. But, if I got a Home Depot card, a Walmart card, or, name your favorite store card, and I'm paying 20% interest on something that was on sale, it's like this completely negated the fact that this item was on sale. Now it's much more expensive than it was had the sale not existed if we never put it on the credit card. So I'm just saying, you got to get ready, folks. Got to prepare. We know what's coming down the pipeline, and proper prepping includes making sure that our financial house is in order. So, make sure there's no high interest credit card debt just showing up every single month and you're just literally just wasting money on that. I would also make sure that I don't have tons of money sitting in the bank outside of my emergency fund. I'd be putting some of that money to work. Now, I'm not a financial advisor. This is not financial advice. I'm not a tax advisor. I do not give tax advice. I'm just saying, for me, above and beyond paying the bills, having my emergency fund sitting there in my checking account or in my savings account, and anything above and beyond that, I'm probably going to want to have that money working for me, either working for me in the form of being invested in, some of my favorite ETFs. You guys know I'm a big fan of the Vanguard VOO ETF. It basically tracks the S&P 500. I'm also a big fan of not only ETFs, but index funds. And that's a great way to generate and create passive income from the dividends that they generate, not to mention the capital gains. So those are some of my go-tos. Now, that's not all that I do. If you guys saw one of my previous videos, we talked about different ways, alternative ways of generating additional streams of income, leveraging the internet, leveraging virtual real estate. How many of you guys have heard of ways to make money leveraging a blog? Like, a blog is nothing more than a website. And on this website, you can talk about whatever you want, and I'm a big fan of leveraging your passion and having your passion create income for you. And I like to kind of call it, turning your passion into profits. So everybody's got a hobby. Everybody's got a passion. Why not get paid for your passion, right? And I coach people on doing this on a regular basis. And it always puts a smile on my face when I show people how they can take what they're passionate at doing and make money from that passion. Like, imagine you love gardening and you all of a sudden found a way or discovered how to leverage your love for gardening, and now all of a sudden you're collecting a check every month for something you would do for free because that's your passion. Or imagine you love to cook, or you love to clean, or you love to paint. So many people have these different passions. They're great artists that, maybe your passion is fishing. Maybe your passion is shopping. Believe it or not, I've literally had conversations, teaching people how they can get paid to go shopping. So anyway, I don't want to go on a tangent on that. Drop me some comments down below. Let me know what you guys are thinking. Remember, guys, always look at compounding your money. Debt is not your friend unless you're making money off that debt. Anyway, guys, drop me some comments down below. You should see a video here and here. Go ahead and click those next videos. Super informative, super helpful for you guys. Make sure you're subscribed, drop a like for the video, and I'm going to catch you guys on the next one. Y'all be safe.